Good evening, everybody. It's Jeff Scott. It's actually the 6th, not the 7th. I'm doing this on Saturday night, not Sunday. I am in Tampa. Therefore, I don't have my home set up and microphone, so I apologize for what is likely to be a little bit poorer quality audio. Don't have much control over it, just using what's built into the notebook. This is my top-down review. Actually went to a VectorVest seminar this weekend, met a bunch of new people. I suspect some of them will be watching this video and perhaps may join the HGSi family as well. I entitled today Melt Up. What a crazy week. I mean, those who've been following me know last year was a good year for my style of trading. I've never seen 4 days like that. I think, I guess I'd have to do the math, but I'm somewhere around 17% up on the year in 4 days. You don't do that in a normal market. Nobody does that in a normal market. I mean, obviously, I'm leveraged with options and margin, but this is not was not a normal week, and it certainly felt like a melt up to me. Disclaimer: this for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I use a number of programs. I own a lot more than I use. I pay for everything I use. I do this for free. No one pays me anything. I don't accept advertising. So I hope my voice is independent. And trading involves risks, and you alone are solely responsible for any decisions you make. I do this as education. Anything I suggest should be taken that way as well. I title my style of trading and education as Be Your Own Guru. Don't do what I do. Don't do what anybody does. Do what you want to do. And I think it is incumbent upon us to learn, to read, to attend programs, to study, and then find what makes sense to each of us, and then put it together as your own style. And that's what I call Be Your Own Guru. I'm started with canceling with O'Neill, improved by Morales and Catcher, taken to the computer with HGSi by Ian Woodward and Ron Brown, and improved upon. John Person taught me how to trade. HGSi told me how to look at markets and identify good stocks, but John's indicators, his money management and trading principles, teaching books, really important in my trading. Van Tharp is sort of the ultimate position size money management person. And then my buddy in the lower left-hand corner, George Lee from Western Canada, just a great trader. I own a lot of programs. I don't use most of them. TradeStation and Thinkorswim, my go-to programs. HGSi and EdgeRater are the key for analytics. Season analysis, I use a number of programs. I like websites. I got a lot of questions of how I use VectorVest and why was I here. VectorVest is a good program. It's much more user-friendly, I think, than HGSi in that it's got a great user interface. It also does everything on a server base, so you don't have to update software and worry about groups and things like that. On the other hand, it has a lot of proprietary indicators that are not reproducible, that are not seen in CanSlim and Investors.com and MarketSmith.com, et cetera. So there's some pros and cons. To me, it's a nice supplemental program, and they've got some auto trading things that I think are very interesting. But for analyzing the markets, it's a secondary program for me. HighGrowthStock.com is the website that HGSi comes from. I am not affiliated with them except as friends. I get nothing for doing these. I did start doing some voluntary amateur support to help some of the users. If you notice, it says here free 30-day trial. It's still free, no credit card. And under investing strategies, if you click on that, you'll see my name and lots and lots of stuff, videos. So markets are cyclical. It seems like the trajectory of the market really was straight up this week. And a melt up to me is kind of the beginning of the climax run. It could go on for weeks, months, or longer, or it could be over on Monday. But I think we're getting to a point where the risk of us having at least a modest pullback, they've been mostly 3 to 4% over the last year, or is this more like early 2015, 16, where we get a deeper pullback? I think the risk is getting higher. Yet you got to trade the market we got, and in this melt up, was a good week to be long. At some point, we're going to fall, and when we fall, you have to change your trading patterns. And as I like to illustrate, I have different strategies that I use in various times. I'm not a giant fan of covered calls. If I was about income investing, then covered calls would make more sense. That's why it's in yellow. In a bull market where there's appreciation of stocks, I don't like to cap my gain, although I do recognize for those that like to get premium, it's also a time when premiums are usually richer as well. I start by getting a clue as to what the market was doing from a sector perspective. This is a sheet of different stocks by industry group or industry ETF. And if you look at it, it's very green. I mean, there's some weakness in energy, XLE and XOP, and utilities are weak. But other than that, the markets were very strong on Friday. Obviously, you probably made a lot of money if you were long. I like to look at Thinkorswim at the major markets. And let's actually look inside the program. And let me make it bigger. And the pattern's pretty obvious. You got lower left, upper right. I'm looking at data since the beginning of July, and the lowest bar was the first day and the highest bar was Friday. So this is clearly a lower left, upper right pattern, a very bullish pattern. OBV heading north, price above the 17, above the 15, above the 200. At some point, we need to get concerned about the amount of extension that we are from that 200-day moving average. More information about that to come. Here is the E-mini. If I look at the NASDAQ futures, they had pulled back, and then on Monday they broke out. They didn't quite get down to the 50 and rocketed up to close at all-time highs as well. The YMs, a lot like the E-minis, but pulled back to the 17 only, now at all-time highs. The TFs are the laggards. The Russell futures are not quite at all-time highs. They are right below closing highs or opening highs there. So I guess they are at all-time closing highs, but they're not at all-time highs yet. Maybe they'll hit that this coming week. And if the markets are strong, you can figure the VIX was low, and the VIX had dropped a lot during the week, but it sort of bounced off of, or it's not as low as it gets on the VIX futures. And then on the dollar has knifed below its moving averages and is sort of bouncing around in this area. I could also look at weekly charts. And very quickly, let's just do that for completeness sake. And again, similar patterns. The blue arrows are John Person PPS buy signals. And whether I look at the E-minis, I guess I should open it up, make it easier for you to see everything. E-minis look great. NASDAQ looks great. YMs look great, all closing at all-time highs. The Russell, the one that's all-time closing high, it looks like, but not quite an all-time high yet, getting very close on the Russell as well. And get an idea of how weak the VIX has been. You could see it's not as low as it's gotten, but it's pretty darn low, demonstrating complacency in the market. At some point, the VIX is going to rise. It always does. And then the dollar knifed through its 200 weekly moving average or 1,000 daily moving average, and the dollar's weak, which in some ways is baffling to me considering the strength of the U.S. economy. Although we did have some miss on some employment numbers. I like to put it all in one chart. The top row is daily, then weekly, then monthly. E-minis, NQs, TFs, NYSE, and YMs. And it's pretty easy to see. Just look at the monthly charts. We're in nice uptrends everywhere. And if you notice the green arrows, which is all, or green triangles, a person indicator, they're all daily and weekly on buy signals. So the market's very strong right now. I like to look at the things underneath the major averages. One thing I like to look at are both the 10-year and 30-year Treasury bond interest. And the interest rates rose on both of them this week. And that probably is why my Bank of America stock moved up significantly. I like to look at AD lines. The white is the AD line, the yellow. It's hard to tell in this, I apologize. The small mid caps and the large caps both setting new highs in price, as well as AD line. If I look at the AD line of the NYSE, and then I look at a number of ETFs, everybody's lock, stock, and barrel setting new highs, except for bonds, which are, no surprise, are weak in the setting of strong markets. As part of a melt up, one would expect strength throughout, which we're seeing. You'd expect to see something, divergences somewhere, perhaps before a sell off, unless it could be done by news. This market is strong. If you look at number of stocks above the 200-day moving average, we moved up here. This line here used to be as high as we got, but we've clearly moved higher than that. So we're getting close to overbought, if not there already. And on the stocks above the 40, also moving higher and closer to overbought. 3-month new high, new low. This is a very fast moving indicator. And when we get up to the higher levels, it almost always predicts a reversal. And we moved up quite a bit this week, but we're not yet in I must reverse territory. Daly McClellan, I guess the only concerns I have here, or the big concern I have, is their divergence here, where we're making new highs on price, but not on the oscillator or summation index, whether I look at daily or weekly. And that's sort of interesting. Does it mean we're not having great participation, even though we're hitting all-time highs? I look at a number of things in EdgeRater to help give me a sense of what the market's doing. One of them I call buckets. Imagine if you looked at 1,500 charts, actually the S&P 1,500, I think it's at 1,503 stocks, and you put Bollinger Bands on all of them, and you asked yourself, where within the Bollinger Bands did the stock close, above or below the midline? And if you took 0 to 100 being the distance between the Bollinger Bands, what decile, or were they minus below the band or above 100 above the bands? So on the right, you can see that 70% of the stocks in the S&P 1500 closed above their midline. That is bullish, but certainly not excessive. However, 18% of the stocks in the S&P 1500 traded above their upper Bollinger Band. When stocks trade above the upper Bollinger Band, they have a higher likelihood of coming back into the band. So I think that's one piece of evidence that says we need to be concerned, in addition to some other things I'm going to show you. There's been no Hindis on either the NASDAQ or the NYSE. To new folks, a Hindenburg Omen occurs prior to every major correction in the last 50 years, but not every Hindenburg Omen is meaningful. It requires a number of factors, and as you can see, the last ones we had were in the beginning of November. So no evidence of Hindi. Market tone, for whatever reason, my data source stopped doing the Russell 2000. But besides the air when everything turned green, for the first time in quite some time, we have a very bullish appearing market tone. And when we look at sectors, interestingly, it's staples that weakened while everything else is going green. So for the most part, we have a very, very strong market. Now, my personal performance and the performance on this list are different. This list takes a number of the lists that I follow on a weekly basis and looks at, if I had bought at the close on Friday and sold on the close of Friday this week, what would the return have been? And I use this to get a sense of what's working, what's not working, also to get a sense of my positions and how they're comparing. Now, since this is a equal dollar value of each stock, it doesn't take into account that I trade options and leverage and margin. So first thing I look at is, where was the S&P 500? It was up 2.6%. Obviously, that is a super, super, super strong week. In fact, the fact that these have zeros meant that there were no stocks that I put in that category. There were no negative watch lists for this past week, which means everybody should have made money. Even the stocks that I thought were potential shorting candidates had a massive move of up 4%. Now, then I want to know how growth did compared to the S&P 500. So I have the IBD 50 was up 4.63. I have the IBD 85, which is the weekend review, which was up 2.5%. And then I have the top stocks in the by HGS, which is this most recent here, was up 3.13. So clearly growth was exceeding the larger averages. And since I do high growth stocks, that's a good thing. And then I look at where my stocks were, and I had, of the ones I owned last Friday, I was actually up 5.12% of absolute improvement in stock price on an equal value basis. Again, I was up nicely on the week, but I do options and use leverage, so the number was a little bit higher than that. That not a normal week, period. I wish 85% of my stocks went up every week. So I hope you made money, and hopefully this melt up will continue. I look at two lists of stocks that help give me a clue early if the market's going to roll over. One I call the Canaries, is taught to me by Ian Woodward. These are the big glamour stocks in the market. And we failed 1, 2, 3, 4 times to break above resistance until this past week when we broke above it on Wednesday, stalled at the upper edge on Thursday, and took off again on Friday. So that's a breakout. We'll see when the bongo turns from red to green, but the Canaries are breaking out. That's got to be bullish. If I look at the larger index, which represents the leaders in the market as of June 27th, when we had an intermediate low, you can see that they are also breaking out to new highs as well, with the candlestick closing above all prior bars here. Again, the bongo weekly is red, which is bothersome. So what do I see? I see a very broad-based market rally. I'm concerned a little bit because I brought this as sort of the emotional exuberance coming at the end of a very long market. And I would have expected this bull to end not with a whimper, but to end with a melt up and a climax run. And it certainly felt this week that that's actually beginning. Whether it's over on Monday or it lasts a number of weeks, time will tell. But last week felt different. Know your news and earnings. The holiday is over. You can see that this week we have a number of reports. Um, as I'm looking at it, we got some Fed heads speaking, got small business optimism, mortgage, more Fed heads speaking, PPI, jobless claims, more Fed heads speaking, and then the CPI on Friday. Things that I'm going to be looking for, I'm going to look for evidence of inflation, the strength of the economy, how people are putting their tax breaks to work from corporate America, and ultimately, our earnings going to grow because of that. If those things are all affirmative, then I have no doubt that this market continues to go considerably higher. That said, no market has ever gone to the moon without intermittent pauses and corrections, and we are clearly getting to a point where I think one is likely. Here are the earnings for this week. As I put down in the bottom, it's a judgment call to hold stocks over earnings dates. I often do hold. I have a position in Delta. I'll make a decision probably on Monday of what I'm going to do with that position. I have a very significant position in Bank of America, and I can tell you what I'm going to do. I'm not going to touch it because I think that long-term Bank of America is well positioned, and I think if it beats or misses on earnings, it doesn't correct more than 5% either way. So I'm not going to go chasing. But I may do something with my Delta. Both of them have profits, but I've got a lot more profits in my Bank of America. Market thoughts, just sort of flight of ideas. Markets at new highs in the perfect setting of synchronized global rallies, low interest rates, growing earnings, and reported lack of inflation with tax-saving euphoria. I say lack of inflation because oil costs are going higher. I notice a lot of my expenses, all my trading costs are going up. So maybe there is hidden inflation. When it comes, rates go up, and that's going to hit the market. Equities melt up as dollar falls. VIX sits at near historical lows. There's danger signs of overheating. I'm going to introduce newbies to my high jump bar, and it's at a reversal signal in the Dow, S&P, and NASDAQ futures. The buckets that I showed you show a lot of stocks above the S&P, in the S&P 1500 above the Bollinger Bands, but we're not at a critical level where it has to reverse. We saw a bingo, which is usually a sign of the baby out with the bathwater, on the Thursday before the new year. And I've never seen one of those occur on a narrow range bar day. And it makes me wonder if it's a sign of extreme exuberance. And there's still that wall of worry. The FBI probes, North Korea, concern about inflation, rates going up. Are there going to be 2, 3, 4 increases by the Feds next year? So I summarize by saying caution is warranted, but markets have a tendency to continue momentum in a single direction longer than anyone might anticipate. I'm tightening my stops, and then I bought a significant amount of SVXY puts for protection. But I want to stay on the rocket as long as it's got upthrust. The interesting thing is, despite being a very strong day in the market, those puts went up in money on Friday. Tonight's agenda, as always, my introductory comments, which I just finished, a quick review of the market, and then my top-down review. onto the charts. We've just concluded my live meeting. We did 3, I believe, pre-meeting webinars. We had a great day in the beginning of January on a Sunday down here in South Florida, and we did 4 post-meeting webinars. So I appreciate everybody that attended, had great feedback, and maybe more of you can get involved next year when I do one, or later this year. All right, so that's the start. So those who've been here a long time, though, I like to look at TradeStation, also get a sense of the market. And that's where we're going to talk about the high jump. So what is the high jump bar? The high jump bar is something that Ian taught us years ago. And he basically said, take the closing price and measure the distance from closing price to 3 moving averages. We chose the 17, 50, and 200-day simple. Add that number, and that gives you a number for extension. That number is unique for every stock, can't be compared across stocks, and by itself is meaningless. You then want to know how high the number was in the past. And then I like to plot what percentage of the highest number we have. And when I get above 90%, certainly above 95%, I know that the market's at a position where it's either going to correct or go sideways, at least high likelihood. So if I look at the E-minis, 6 points. Point number 1, green or red arrow. This is a person buy or sell signal. This is a win. Second thing, color of paint bar. Green means I can buy or hold. Red means I should short or hold. I shouldn't be instituting new longs. And blue is neutral. So I look at daily, weekly, and monthly time frames. It's green throughout, 3 buy signals, very strong. These red dots on top of the last paint bars are worrisome because those suggest some MACD divergence, that we have a higher high, but we have less pressure with the MACD. Perhaps there's less participation. Fourth thing I look at is how extended am I from the elder envelope. We don't get any. I've never seen it this extended. And whenever it gets extended, it has a tendency of either pulling back or, in this case, going sideways until the bands catch up. So we're at a point where that's likely. Number 5 is the weekly bongo, which is the second dot down, green or red. The weekly bongo is my buy-sell indicator that I developed. And lastly, I look at the high jump bar. And you can see on the E-mini, the high jump bar is 100%. Yes, it can go higher. Yes, I think the markets will end the year higher than today. And yes, they'll probably even go up on Monday. But what this tells me is we're in very high risk area of a correction, a pullback, or a sideways move. And it doesn't have to be a big move. It could be a 1 to 3% move, allow the rest of the data to catch up, and then the market can go higher. But a high jump of 100 almost always results in, at minimum, a sideways move. If I look at the YM, the Dow futures, picture's almost exactly the same. Green arrows, green paint bars, MACD divergence, high jump at 100. If I look at the Dow futures, wait, was that? Hold on a second. All right, so that was the Dow futures. The NASDAQ futures, the high jumps at 93.10, green arrows, green bars, but the red dots. So these major indexes are really all the same. They're extended at new highs with evidence of MACD divergence, which might suggest that they have some increasing risk. Now, the Russell not as extended within the envelopes, unlike the others. And you can see the Russell here is really going sideways, as in a buy candle on all 3 time frames, and only at 75%. So will we see another rotation out of the big guys and into small stocks, which is a typical January effect? The big guys going sideways, the small stocks leading the market forward. I think that's a possibility, or we just keep going up. But at some time, you know, the correction is going to occur. We're just getting closer to it. The Russell we looked at, the dollar has been weak, and you can see in the US dollar futures a couple of things. Clearly in a sell signal, but now you have these green dots here, at least on the daily, giving some idea that perhaps we're having, there's a MACD divergence, lower lows, but not a lower low on the MACD histogram, and that could be sign of an early reversal coming in. The VIX had pulled back this week as in a sell signal. The weekly bongo, which is my buy sell indicator, is now on a sell. So VIX looks like it goes lower. And then, for example, gold we could look at. And gold has had a very nice run, but gold is getting to the point where, at least on the daily, it's at the upper envelope. Still some room to run on the weekly, but gold has not been working for me over for quite some time as a hedge or anything else. So I'm feeling concerned about the market, but I also recognize, as I said in my opening comments, melt-ups can continue on for a longer time. Jumping into HGSi, let's go down to Woodward and Brown user groups. Let's go to the first group, which is Major Markets Plus. Hit the warehouse view, and this opens up a number of indices, major indices, ETFs, etc. And I'm going to rank it by price and volume. And I'm going to put all the emphasis on today, on Friday, and a little bit on Monday. And you know you're in a bull run when the Dow, the NASDAQ, the transports, and the NYSE are at the top. Here's the NASDAQ 100, Russell 2000, S&P 500. And the laggard is bonds and commodities and volatility and utilities. That's what a very bullish market looks like. We are in one right now. Not to be very repetitive, but for those that use primarily HGSi, to understand this, let's just take a quick look at the indexes. This is the S&P 500. And for those who've not followed me before, you haven't had a chance to see my indicators. I know that this can be confusing. I apologize for that. And I do have some videos I'm happy to share with people about the vocabulary. And for those that are new to HGSi, I have some videos about what the different buttons do. So on this chart, I have my weekly bongo and the daily bongo. This is a buy-sell indicator. It comes from the RSI, and moving average is a price. And it's a very good, albeit slow-moving indicator. But a green weekly bongo tells me I'm in an uptrend, which I clearly am. The next bucket, two buckets, are Hindenburg omens with two different calculations to see if there's any risk of a big correction. This is that high jump bar. You can see it's at the top. And here's the S&P 500 going back to August. Nice steady uptrend. The time to buy is when we're coming off the moving averages. This is an extended indice, and I keep talking each week about at some point we're going to pull back to the 50. Dow Jones Industrial, exact same story, nothing more to say. The NASDAQ Composite, pretty much ditto, starting to get pretty far away from that 50-day moving average. The Russell 2000 has been the laggard, and you could see near the highs, but not at the all-time highs. I look here at the dollar as well on the daily, and you can see dollar is just floating around at the lows. I look at the VIX, which we've already looked at, so be very quick. The VIX is down on the lows. The rising VIX is bad for your portfolio. A falling VIX, you'll make money. In times of complacency, I usually make money. The question is, when does the VIX pop? And because I know that's going to hurt my portfolio. And for those that are gold bugs thinking this is great, the dollar's weak, I'm going to make money. It's been a nice run. I mean, I could stick my drawing tool on this and go from the intraday low up to the closing on Friday. And we can see that gold is up 6.8% in 16 trading days. So not too shabby. But if you look at a bigger chart, a weekly chart, for example, on gold, you can see gold's been in a pretty substantial downtrend for some time. And then one could also look at silver. Go back to a daily. A little bit stronger, it's actually popped above the moving averages. So now that I've convinced myself that we need to have a correction someday to get some of this excesses off, but not knowing when someday occurs, I have to be pointed bullish, although I do have some concerns about this market. So the next thing is to look at industry groups. So I go down to 07, and I now want to rank industry groups by momentum. So we have something here, we use the 2-day force as a measurement of momentum. And I see that I have 67 industry groups out of about 175. with short-term positive momentum. And despite the big melt up in the market and everybody participating, I still have 12 industry groups that are moving to the downside. Notable among them are exploration and production companies, midstream oil, steel producers, marine shipping, infrastructure, construction, cement, all of which might have been expected, or many expected to benefit, especially with the new wall that Trump has been asking for and has started asking for. Let's go back to the winners. What I typically do is I go through the top 10 groups and see if there's anything I like. So I'm going to make sure I'm ranked by raw combo, and I'm going to right click, change index group, and we can see the stocks in e-consumer discretionary. Clearly, there's some big winners here. I'm not going to go into detail about my views here, but let me just tell you what's in them. I already told you about the bongo. That's the first two bars. The third bar is accumulation, where green is accumulation, red is distribution, and the different shades in between, yellow is neutral. The fourth and fifth bar are the 13-day force over the 2-day force, which are momentum indicators from Alexander Elder. The fifth bar is the high jump indicator, and periods of time when the high jump is hitting the top, I know that I'm going to have a sell-off in the market. The next one down tells me whether if there was a viable gap up, aka morales and catcher. Then I have the squeeze. Then I have mobile breakouts from David Elliott. On my price chart, I have candlesticks. I have Wells Wilder's PSAR. This dark gray line is the industry group. I use an 8-day exponential and then 3 simple moving averages of 17, the 50, and the 200. The next are pocket pivots, which are an intermittent signal that could be add-on points or buy points. I have OBV with a moving average, and then I have kahunas, which is a momentum indicator showing an excessive movement in the market. What I want to find and what I spend my time looking for are periods of time in this area where the stock has reversed the downtrend into an uptrend, has thrown a number of blue indicators, a mobile breakout, and turns around. I am a pullback trader looking for stocks in an uptrend that pull back to the 50 and break out on momentum. So this one is breaking out, already broke out. It's a beautiful stock, Alibaba, good earnings per share growth, no dividend play. I think that's a viable stock. I'd rather buy it closer to the 50. You may not get that option. Overstock, I'm afraid of because a lot of its run has been Bitcoin related, not fundamental, so I'm not interested in overstock. Amazon.com is a big position of mine. It's at all-time highs. Its earnings are in approximately 4 or 5 weeks. And it's in a beautiful uptrend, sort of had a high base up here. Looks like it's taking off to go higher. Hard to buy that, not so hard to buy its options. Netflix, after stagnating for months, has broken out to new highs. This is usually the season of Netflix. I keep promising the guys that I do my class, I'm going to do seasonality on it, and then I forget. So I'm going to do it right now. So the idea behind seasonality is if a stock has a similar move 90% of the time during a certain period of time, then maybe there's something going on with that stock, and you might want to repeat that trade. So we're looking at Netflix. This is seasonalitytrader.com. And what do I see? The obvious thing here is a lot of green. So we're in a tight trading range. Now we are at the top of the range. I'd rather buy it on the bottom. But we're going into a very strong seasonality time. In fact, if over the last 10 years you had bought on January 22nd and held it and sold on March 2nd, the average return 9 out of 10 years positive is 29.2%, and the 1 year negative was all of 0.9%. This is probably my favorite seasonality play of the year. I am already long, and I will adjust my position, probably sell some premium way out of the money, and maybe buy some in the money calls to participate in what I think may be a big move this year again. So Netflix looks great. JD.com, I don't like the earnings as much, but a nice pullback to support, kind of forming a cup. Now it's coming up the right side. Earnings aren't as good as the others. eBay, um, old name, but a stock that looks like it's trying to break out to new highs. Sorry about that. I'm getting tired. So e-commerce discretionary looks great. A lot of stocks look good. Internet media. I don't know anything about CNET. Cheap stock that had a big move. And this is a pattern I don't play. It's a pattern that doesn't always end well. So looks like it had a big news move. We're going to skip it. Out of curiosity, how much volume did it have on this day? It had 82 million shares when normal volume is 2 million. These are crazy. You've seen them with Intercept Pharma, Alpha Tech. You've seen them with a number of companies, Plug, and that pattern never ends well, so I would have no interest. Let's take a look at Facebook. I do have interest here. Here's a stock that has really been basing for quite some time, since July, had great earnings and is now broke to all-time highs. I think Facebook looks interesting here. Now, here's the problem with Facebook. Excuse me while I clean up my mess. There's Facebook, beautiful uptrend. Let's look at an option chain on Facebook. At the money is, so Facebook's 186. This is one where I use options on, but even an at the money option, a February duration is $7.50. So, those who've been around me for a long time know what I would do. My favorite trade for something like this is a synthetic. And in fact, I could look at a strategy. I don't want to do that one. Wrong one. I can build some various spreads. And I'm bullish on Facebook. So let me just pick some bullish spreads. Long stock, long call, short of put, and a synthetic. And let's look at March. And so there are many different ways of playing. These are the different combinations. Here's the strike prices. Here's the last price, bid and ask. Here's your Greeks, probability in the money, and then where do I have to go to make money? Maximum risk, how much I can lose, maximum profits. How much I can lose is how much I paid for it, plus how much I lost on it. If I get paid to take the trade, then that reduces some of my loss. So I look through and I get excited by maximum profits. Now I can get maximum profits with a long call, but I have to risk that call could go to zero. Long stock. I can buy stock, but I carry risk that the stock could fall. Or I could do a synthetic long, which has infinite upside, but my maximum risk is the same as buying the stock, yet I have to pay only $247 to control 100 shares versus $895 if I bought a call. So I like the synthetic because it gives me the same upside of a stock, the same, and it's cheaper than buying the call because I buy a call and sell a put at the same strike price. And if I was to look at the P&L, here's a stock P&L. And if you've never seen a curve like this before, these are the various prices on the bottom, and up the top is my profit and loss. And the more the price goes up, the more money I make. So you want to be living up here where your options are very satisfying. So this is what a long stock looks like. I can lose or I can win. This is what a long call looks like, where I have unlimited upside once I cover the premium that it cost me to buy the call, and all I can lose is the premium on the call. So I didn't mean to hit that. By doing a synthetic trade on an expensive stock, I'm able to control the stock, have the exact same P&L pattern as buying the stock, and that's how I trade a lot of my expensive stocks. The risk is that it can fall to zero, the exact same risk as if I bought the stock. So Facebook breaking out after a long sideways period. Google looks like Facebook. Alphabet C looks like Facebook. Weibo, a Chinese online player, had pulled back strong, and it gave me my favorite signal. Kahuna, pocket pivot, breaking out off the 50 with a mobile breakout from a squeeze. And I'm back in Weibo with that signal. And YY has been a huge leader. To me, it's pretty extended at this point. Continuing down the list, semiconductor devices. NVIDIA, talk about the stock of 2017, having a good start to 2018 as well. You can see on this that it's in a very powerful uptrend, had broken down below the 50, but has had recovered nicely, had pocket pivots and kahunas this week. Xilinx broke out from a squeeze and broke above the 50. Kahunas, pocket pivots, viable gap up. This one looks interesting. It's on my buy list, I believe, for this week. Xilinx, a semiconductor stock. AMD, concerned that the hardware security risk is less of a problem for AMD than Intel, so the stock had a nice move. And Broadcom, one which I unfortunately sold as it pulled back, looks like it's getting ready to run. So within semiconductor devices, there are a number of stocks that look good. Automobiles. I keep reading that this Fiat Chrysler thing is because of electric vehicles. I thought it was a takeover. Regardless, it's hard to chase this. If you're in it, I'd hang on. I'm not sure I'd be running and buying Fiat Chrysler right now. It's had a breakaway gap and it's very extended. Communications equipment, led by Apple, Cisco, and Arista Networks. Here is Apple. Apple's starting to move again. It's above the 50. It's at a position where I like buying things because it's basing here for about a month. It's right above the 50-day moving average. It just is about to have a PSAR reversal. It's in a mobile breakout from a squeeze. So Apple even looks interesting here. And it's certainly been behaving much better over the last week. So there's a number of things that look good in communication equipment. Number 6 was oil and gas services. It's kind of interesting that this would be up here while the exploration stocks are down. But at some point, we're going to see more drilling. You had some positive news for the drillers with Trump opening up a lot of the offshore territories. You see Schlumberger, which is one of the big boys, breaking above its downtrending 200-day moving average on multiple pocket pivots. I've been playing Halliburton. That doesn't look a whole lot different, except maybe it started moving up a little earlier. Also looks very strong and driven by news. At least my guess is by news. Consumer finance. Some of this with Square may be some exuberance related to Bitcoin. I don't really know enough about Square. It's not something I typically follow, but boy, do I love this pattern. A pullback to the 50 and a move above with momentum. We got pocket pivots. We have kahunas. We've had a PSAR reversal coming out of a mobile breakout from a squeeze. And I think that this is an interesting story right here. This is Square. Visa, what a nice tight run. Kahuna, pocket pivot. Don't love the earnings per share growth. Do love the chart pattern. I guess when your market's this strong, you're going to see some big winners. MasterCard looks a lot like Visa. Continuing down my run, number 8, application software. The gaming stocks look good. Electronic Arts, I think, has got a great chart pattern. And again, my favorite pattern, uptrend, sideways, pullback to major moving averages, pocket pivot at Kahuna, mobile breakout in a squeeze. And this is one I have interest in as well. A lot of stocks I like this weekend. Activision Blizzard, still in my mind in a trading range that I was talking about to the left. Adobe Systems, disappointed in it, how it's been behaving perhaps, but in reality, it's in a nice tight move up. It pulled back and then it just had great earnings, but another great looking stock. Not disappointed, changed my mind. Salesforce running up its 50-day moving average, another new technology high growth stock. I know we use it in our offices, a great platform. So a lot to like in the application software. How about semiconductor manufacturers? I think Applied Materials, but you also have Lam Research. Pullback, no momentum yet. Applied Materials, which did have a Kahuna and pocket pivots this week. I think it wants to go higher, as does Taiwan Semiconductor. Continuing down my top 10, last one would be internet-based services. C-Trip, I'd pass on that, kind of down in the pattern. This one's interesting. I didn't call it out, but I saw a lot of strength in Chinese names. We saw Alibaba, Weibo, YY, Momo even picked up, BZUN picked up. Here's another Chinese stock. And it's one of those rapid movers that pull back. Is it going to go again? I don't know. Don't look like it's got great earnings. Bit Auto, another stock at a place that would either be a right position for a bounce, or if it fails, it would be an opportunity for shorting. Sorry about that. Priceline Group, one of the glamour stocks that's struggling, has to get above its 200. So there's a lot of good stocks out there. Now, I do my top-down review. I also collect a zillion user groups from various sources. You can see some of them are listed in here. From Investors Business Daily, from marketsmith.com. I bring some in from VectorVest. I have some from HGSi. What I basically do is I roll them all up into my consolidated buy list, which is right here, and then I filter them for price and volume, and I had 694 that made the cut, and I looked at each of those this afternoon when I was at the conference, and that gave me my list of stocks that I thought looked attractive. Again, some of the stocks that came to the top were Netflix, Alibaba, Weibo, 58.com, YY.com, a lot of Chinese stocks. I think that's probably telling me something. Now, some of the unique things about HGSi, for those of you that might be new to it, is, I mentioned that my favorite type of stock to buy are uptrends, then pull back to support. Well, in HGSi, there are these things called smart groups, and these are scans that are done every time you update the program. This one gives you a list of the best performing stocks that show up in the highest number of these lists. So the hypothesis is if a stock is great, it shows up in a bullish list. If you show up in a lot of bullish lists, you must be a really great stock. I don't know if I validated that hypothesis, but that's how I look at that. So this is usually a group of leaders. Ghilardi has a thing called the sprinters, and these are usually some very good stocks fundamentally and technically. Somebody asked me about Supernus and what I thought about this about a week ago. And I sort of laughed to myself because I know this company well. I knew it back when it had big earnings per share growth. It stubs its toes here, but it's sitting right on support. It had a number of pocket pivots, a Kahuna, but it's had some negative changes as well. So one of the problems with a stock that's sitting on support is you not only do not know what direction, but you don't know when it's going to go. I'd like to see it move before I trade it because right now it's in a very tight trading range, although one that is um, trending up along with the 200-day moving average. Under Ian Woodward and Ron Brown, I like the best of Woodward and Brown. I mentioned a bunch of stocks that look good to me: Weibo, Netflix, YY, JD, Alabama, Amazon. They're all sitting right here, and that's the best of Woodward and Brown. Best stocks under $15. That'll give you a list of some alternatives as well. And then you'll find my name here, and under my name, a number of my favorite scans. I like stocks with big volume. You see if there's anything here that I thought looked good that you need to see. Nope, a lot of times you'll see big volume prior to a big move. This is a scan that finds stocks that pull back to their 50-day moving average and they're supposed to be in an uptrend. Here's a beautiful chart. I don't get the company. These, I think, the Clear Braces company. Fundamentally, I don't know how they're so expensive, but a very tight uptrend, sort of a climax run up, a pullback to the 50, and we're now sitting on the 50 with a couple of kahunas, pocket pivots, a mobile breakout from the squeeze, and this looks interesting to me. So this is a scan that only pulls up stocks that have certain criteria. Uptrend, pullback, sideways on the 50 with a kahuna, with momentum coming in. So that's one of the scans that I might use, and that's what the real power of HGSi is. So I also like, under my name, squeezing right below the PSAR dot. Here's one that I thought looked good, which is Celanese. And so I have an uptrend. It's gone sideways for a while. It's sitting right above the 50-day moving average. And Wells Wilder built a number of different systems, and he has a PSAR in reverse. So when this red dot here, if the stock goes up and the red dot drops below the price, that's a buy signal. And a lot of people that follow Wells Wilder. So I have a stock that's about to have a buy signal that's in a squeeze with a mobile breakout, weekly bongo just turned green, pocket pivot, and a kahuna. That's a pattern that shows a lot of momentum. And what I like about this, this is a very hot group right now. Think about Westlake Chemical, one that's really hot but very extended. So I find a lot of my favorite stocks on this list as well. So what I do is I go through within TradeStation. I also have a number of scans that I like. All right, come on. It's not sizing. All right, there you go. And one of my favorite scans is the Trilogy scan. And these were stocks that meet some of John Person's top criteria for a trade. And so I spend a lot of time looking at these stocks. Let me make sure that's the right list. Yep. So all of these got further dissected, and several of them made it to my watch list. So ultimately, I've looked at a lot of different watch lists, a lot of different charts, different platforms. I even have scans, and this is a scan I recently shared with some of my attendees from Thinkorswim that I found some great stocks on. These are stocks that have been in a squeeze, that have broken out. And a lot of them, as you can see in yellow, had high closed dojis. A lot of them have kahunas and pocket pivots as well. These are some great stocks. PayPal is another stock I like. And I can do similar chart patterns in Thinkorswim. Let me go back here and do this the right way. So when I do Thinkorswim, and special thanks go to a friend of mine, Bob Meager, a friend of many of us in HGSi land, because I basically took the indicators and he created labels for me. So PayPal is one I like a lot. It had good volume today, closed near the top of its range, 2.5.7% move. Week was up big. Bongo daily is green. It had a positive forces. It has a bullish PSAR, which means that the color is below the price bar, and a pocket pivot, 210 EMA upside breakout today, and has a bullish chandelier stop. And its money flow, or VSA, is also positive, bullish on effort to rise. I like PayPal a lot, and that also made my watch list. We'll just look at it under here. Beautiful uptrend, sideways move, moving up off the 50 with a pocket pivot with a kahuna a couple days earlier. So there's a lot for me to like on this chart. And I think we talked about it on my webinar earlier in the week. So usually I share with you some of my picks and some comments on my picks. So after all my work this week, these are the stocks that made it to my cut. Now, just because they made it to my cut does not mean I'm going to buy them. All it means is that I'm going to put them on an active watch list. I'm going to look at what's happening with them, momentum and prices, and I will dabble as the week goes on. When I say I put them in an active watch list, I stick them into TradeStation, where I look for John's signals, high close, low close dojis, PPS daily buy or sell, existing trends. But I also, when it's 4K, this whole thing will open up, not just this stuff. And I can scan for green candle lows, red candle highs, ISO failures, squeezes, mobile breakouts, breakdowns, pocket pivots, and viable gap ups. So I have the ability to take my buy list and scan it during the day, looking for new signals that might get me interested. I carry a lot of positions. I tell that to a lot of people. I feel comfortable with that because of technology. It's not for everybody. I swing trade, and I do mostly options. And I trade just by looking at charts the way I did tonight, and I look for those stocks that are in an uptrend with momentum. They get put into my watch list, and then I look for signs of continuing momentum to the direction I want to take them. So we looked at a lot of my favorite stocks. Let's see if anything popped up. CBOE, this has been a tough one to find an entry point. It had just coming off a small pullback, had a pocket pivot, kahuna, mobile breakout from a squeeze on Friday. This thing looks like it wants to resume its uptrend. I like that one a lot. And I thought before I was so tired, I might have worked up where I might be buying things on Faro, but I've already done it on another stock. But here's another stock, a nice uptrend, sideways move. And then today a pocket pivot, a kahuna, mobile breakout from a squeeze. And clearly looks like it wants to go higher. So I'll just go back to my buy list for a few minutes. Again, I'd like to thank everybody that participated in the live seminar. I think those who've been to my seminars before know that if I did this for money, I probably wouldn't be doing the seminars I do. We had a great dinner. Those who went on the boat, we had a great time. I don't charge for these. I do these because I like to support the users, and I've made a lot of friends doing it. So I think we're in an interesting time in the market. I think, I learned from other people. I don't claim to be a scientist and have invented everything. And I remember at one point somebody was showing me how they use some of the major market indices and put on some ribbons and look at markets and try and understand if the markets have gone too far, et cetera, et cetera. So whereas I made a case with the buckets, with the high jump bar, with the chart formations, that we are overbought in the US markets. Let me undo that for a few seconds and tell you that even though I think we're due a small correction, some of the evidence of why I think we go higher. On this chart, which is, I believe, weekly of the S&P 500, let me prove that to me. Let's see. Yep. I have plotted a number of moving averages starting at 10 and 10 point all the way up to 290. And then I plotted the market, several bull markets. And so let's make this a little bit bigger. So I started my analysis All right. So what I'm looking at here are a couple different things. I'm trying to find whether or not we're in a setting that looks like disaster, or if we're in a setting that looks like we have an ongoing bull market. On the top, I have my weekly S&P. I have a number of moving averages, and I have the MACD. And I'm looking to find a pattern that shows me I need to get out of the market. There is no question when this band of indicators, moving averages, rolls over, that it's time to be out of the market. The problem is it's too late. It also looks like when I enter into this band, I might want to get out of the market, but is that too early? So I've spent some time, and as I look at this, several things come to me. We had a very long duration of a bull market from November of 94 to October of 2000. 911 points in 305 weeks. You made money by sitting on your hands. When we broke into the band, which was confirmed not by just a tip of the MACD, but by a MACD breakdown, we sold off hard. So I'm looking at this moving into the band with a negative MACD as potentially being the sell signal. You would have stayed out of the market until sometime, perhaps in 05, when the price finally broke above the bands and the MACD is now positive. So now what happened? Using the same philosophy, we had a run from November of 4 to January of 08, and it ended with the price diving into the envelope and the MACD diving below the zero line. Notice the Hindis occurring before the major pullbacks. These are bingos. These are baby out with the bathwater signals. 233%, 166 weeks. So 3 years and a big move. Now, had you taken this combination of a break into the bands and a negative MACD and got out, you would have avoided most of the subsequent market meltdown. And then this is not an early signal, but when would you have gotten back into the market here? And this is a problem with this, because I got in back in March of 2009. Now, you could have taken the MACD in June, but you didn't break above the zero, above the moving average until late 2010. However, even though you were late to the party, and that was a very short move, starting from September 11 to August of 2015, again, a break above, rising MACD not quite above, it was up in 200 periods 58.8%. Again, you go back to the middle of 2015, we had sort of a mini correction back into the bands, negative MACD, and then we went positive the MACD, we broke above the bands, and as of last week, earlier this week, we were up 682 points in 95 trading days. So a couple of things come to mind. We are way extended above these bands. There is probably some element of exuberance here, and hence the high jump bar that I showed you. The second thing is my MACD is going higher. It's not going lower. My conclusion is this does not look like the market did before the prior major pullbacks. So I think this market goes higher. I watch this closely because I will be out of the market as the MACD starts to fall and the prices go back into that bundle. but I don't see anything here that says we have a major correction coming. Obviously, we know that it's going to happen someday. And you don't get from here to here in a straight line. You have a series of small corrections. So maybe that's what's in store. Bottom line is this bull market is amazing. It's been an incredible month of December, a incredible 2017, an unbelievable first week of 2018, a market that I think still has some legs to go, but a market that's probably a little overheated. And at some point, whether it's Monday, whether it's Wednesday, whether it's 3 weeks from now, we're going to get at least a 3 to 5% pullback. Maybe we avoid that by going sideways. Um, that said, I didn't tell you you have to go short. I didn't tell you it's going to happen tomorrow. I'm just telling you that I think the risk of that correction is growing. I hope you all enjoyed this, learned something from it. If you want further information about HGSi, just email me at hgsidoc@gmail.com. You all have a great rest of the weekend, and uh, and special thanks to those new folks I met at the VectorVest meeting. Good night, everybody.